Hello, everybody, and thanks for joining us for another virtual investor event hosted by NZX. My name is Doug Vrame, and I'm a member of the capital markets origination team here at the stock exchange. We work with all the listed issuers, and today we've got three companies to present. Before we introduce any of the speakers, I was just going to remind everyone of the format. There'll be three companies. Each company has 15 minutes, followed by 5 minutes of Q&A. So we do encourage you to ask questions. You do that by going into the webcam control box. It should be on the upper right of your screen, and there's a chat feature, and you can just enter your questions in there. We'll see them and then pass them on to the presenters. Anything we don't get to, we'll have answers for you after, and we'll send out a big group email. So please do that if you have any questions at all. And then at the end, we'll send out a link to the recording and everything. So with that, talking about the presenters today, we've got three. We've got Spark, and we've got Stefan Knight here on your screen. We've also got Just Life Group presenting, and New Zealand Rural Land Co. So I'm going to start to quickly turn it over to Stefan, and just by a very quick introduction, Stefan is the CFO of Spark, and we appreciate you taking some time to put some thoughts together, and I will turn it over to you. And then after you're done, I'll come back on and we get to the questions. Thanks.
Great. Thanks, Doug. So before we begin, can I just check that everyone is seeing the right, the presentation?
We can see you up top and then the PowerPoint at the bottom, which is good.
Great. Okay. Well, welcome everyone, and it's wonderful to be here. Thank you for taking the time this morning to join us. My name is Stefan Knight. I'm the CFO here at Spark. So I'm going to spend the next 15 minutes or so talking through some of our most recent financial results, our strategy out for the next 3 years as well, and as mentioned, we'll have a couple of minutes, we'll have 5 minutes for questions at the end. Before I jump into the detail, I thought it would be, let me just bear with us for a moment. Okay. Hey, Doug, can you just confirm that those slides have now changed so that we're seeing Spark at a glance?
Yep, you got it.
Great, thanks. All right, so what I wanted to do just before we get into the details, I thought it would just be a useful place to start with a reminder of just who we are. Well, a number of people will know Spark, not everyone will. So Spark's New Zealand's largest telecommunications and digital services provider. Our purpose is to help all of New Zealand win big in a digital world. We've got a really comprehensive range of products and services, but you'll more than likely know us for mobile, broadband, cloud, and our IT services offerings. We serve all customer groups across New Zealand, from retail customers through to small businesses, enterprises, and the government as well. Our 4G network reaches 98% of New Zealand, and we've got around 2.7 million mobile connections. And we're also rolling out a 5G network, and we're now live in 77 locations and growing. We have around 700,000 broadband connections, and we've got a very large retail footprint as well, with 63 stores, 24 regional hubs which serve our small business customers. And we're also really proud to be one of New Zealand's largest employers. So we've got around 5,500 employees. Across our key markets, we are the leader in those key markets. So in mobile, we lead the market on both connections and on service revenue. In broadband, we've maintained our #1 market share position in spite of very strong competition in the space. It's a very competitive marketplace out there. And we're also the #1 private cloud provider or operator in New Zealand, and we're #1 in the SME market for telecommunications, with a growing presence in the IT space as well. So hopefully that gives you a bit of flavour. That's a high-level overview of who we are. I thought it'd be worth spending just a couple of minutes on the financial results that we delivered to the market for the year ended in 30 June 2023. So these were the results we released back in August. We were really pleased to have top line revenue growth again. So revenue came in just a bit over 3.9 billion. That was up 188 million. We think that was a pretty strong outcome in a really tough economic environment. We delivered EBITDA growth. So EBITDA, effectively think of that as the operating profit of the organisation. That was up 43 million to 1.193 billion. So once again, really pleasing to see growth in the operating profit. We generated free cash flow of 489 million, which was up 56 million on the prior year. And that ultimately funds the dividend. So as a reminder, the dividend's 27 cents per share. And this is something we've been working to for quite a long time. Our policy is to have the dividend funded out of free cash flow. And so that was once again a really strong outcome. The board confirmed that the FY23 dividend would be 27 cents per share. And as a reminder, that's up 2 cents from the prior year where it was 25 cents per share. So a strong outcome there. It is worth remembering that during the year we did complete what we refer to as the TowerCo transaction, which was where we sold a majority stake in our mobile tower assets. It generated proceeds of $911 million. And following the completion of that transaction, the board made the decision to allocate that into 3 basic areas. First of all, we set aside $350 million for investment back into our networks for future services for New Zealanders, and I'll talk a bit more about that shortly. We then set aside $350 million for returns to shareholders, and about just under 150 million of that has been returned to date via an on-market buyback, with another 200 million to come over the remainder of the year. And the third part of those proceeds were used to offset some of the lease implications of the TowerCo transaction. So overall, I think that was a really strong outcome. If we look at the performance across some of our key markets, mobile is absolutely our standout performer. Revenues in this space were 980 million and up 9%, getting very close to that billion mark. And that has been a really pleasing outcome. The 9% effectively broke into about 3%. That was the return of roaming. Obviously, with borders opening, our customers are travelling, so we're seeing roaming come back, which was something that had dropped off in the years prior. But we're also seeing the rest of that growth actually coming from customers using more data and from increased connection and increased spend on those connections. So that's been a good outcome. Broadband, as I mentioned earlier, is a very competitive market. Revenues were down about 2%, but it was really pleasing to see that they've actually stabilised in the last 2 halves when we compare against the prior periods, and also with the base stabilising as well. That's been an important outcome for us. Our cloud business revenues were down also around 2%. So we had an aspiration to grow between 2 and 5%. We weren't able to achieve that in a tougher market. And so we've got some actions underway in this space. We've launched a new hybrid cloud offering to have a broader appeal to a number of our customers. We've got a new service management offering. And we're also moving decisively on addressing the cost base to make sure it's fit for purpose in a more competitive environment, particularly as public cloud becomes more common in the New Zealand market. And when we look at our future markets, we saw a good growth in IoT. That's our Internet of Things business. Revenues were up 33% in this space. We've now got over 1.4 million sensors out there in the network, giving us information on customer networks and helping customers solve problems within their businesses. Spark Health continues to grow, was impacted by some of the delays in the health sector reforms, and we also saw the exit of Spark Sport completed. As we look to FY24, we've got confidence in our ability to continue on that trajectory, to continue to grow, and as a result, we have set guidance for EBITDA, or once again that operating profit, to continue to grow. And also the board have guided to lifting the dividend from 27 cents per share in FY23 to guidance of 27.5 cents per share in FY24. So if we look at FY24, the dividend itself will return around about $500 million to shareholders, and with the share buyback, there's another 200. So in FY24, we're looking at around $700 million of shareholder returns, which we think is a pretty good outcome. I wanted to spend just the next few minutes talking about the strategy that we have now got to deliver and guide us through the next 3 years. As with anything, when you start, refreshing your strategy, it's always really important to take stock of where you're at to date. And one of the things we did is we looked at, well, where are we? What are the things where we have strengths, and what are the forces that are going to shape our business as we look ahead? And I think we're starting FY24, or I know we are, from a very strong position. So our customer, our people, our brand, our sustainability fundamentals, they're really in a healthy space and growing. We've maintained and enhanced our #1 position in key markets, and we've got a clear strategy to grow in each of these areas, and I'll talk a little bit more about that in a minute. The work we've done around data and artificial intelligence has really given us a competitive edge and is driving a level of efficiency and better outcomes in the campaigns that we're running in terms of our marketing. We're continuing to invest in high-tech areas such as data centres, and that will generate incremental revenues and margins in the coming years. And I think we've got a pretty strong record of demonstrating control of our costs over the last few years as well, and that won't change as we look ahead. So that comes together with what we would call our strategy or our plan on a page. And I think this is a really helpful way just to see everything in one place. We use it to help communicate to people such as yourselves, our investors, but also to our people internally, so they can get a sense of how the whole strategy comes together in one place. So our purpose remains unchanged for the next 3 years, which is to help all of New Zealand win big in a digital world. And over that next 3 years, we're going to focus on empowering the people and the businesses creating New Zealand's tomorrow. We're going to do that, particularly in the mobile and the broadband space, by bringing our New Zealand customers the best digital experiences. And that will make sure that we continue to position ourselves in that leading mobile position and really around optimizing broadband. We'll also be enabling New Zealand businesses to grow and become more productive, and we see technology playing a really essential part in how we do that. And so that's a good segue into the next part, which is the way in which we will deliver it is effectively through 3 enablers. The first one we call Next Evolution Technology, and that's about making sure that we've got the best technology for New Zealand, and we are continuing to lead the market in the space. And the work we're doing in 5G, the pace in which we're rolling it out, and some of the incremental investments we're making give us real confidence in the space. Secondly, we're continuing to simplify the organisation to make us easier and simpler to do business with, but also doubling down on the way in which we're using data to drive our decisions and drive better outcomes. And third, making sure that we've got a culture of innovation so that our people can thrive and we can ultimately deliver better product and services for our customers. That's all underpinned by our sustainability and Maori strategy, which I'll touch on more shortly. And ultimately that comes together to deliver the outcomes where we think we'll see, or where we have ambition to continue to grow EBITDA, that operating profit, and continuing to grow free cash, while also delivering better customer and people outcomes as well. One of the areas that has been really topical lately has been the topic of satellite. And I thought it would be worth just spending a couple of minutes on it. Spark's owned and operated New Zealand's largest Earth station up at Warkworth for a number of years. We have a full suite of satellite services that we offer through our wholesale business. But more recently, for our mobile customers, we've announced a new partnership with Link Global, and that will allow them to use their phones in areas that are not easily reached by traditional mobile coverage. So it is important to note that this satellite capability is still evolving. So we'll be starting with a trial of text-only satellite to mobile service by the end of this calendar year. But then we're looking for a full rollout of that text capability throughout 2024. And for our business customers, we've announced a partnership with Netlinks, which will provide enterprise-grade Starlink satellite broadband. And so we've got a trial currently underway with a few customers, and we'll have a much more fulsome rollout over the remainder of this year. I think it'd be worth just having a quick look as well at some of the areas that we are investing in as we go ahead. As I mentioned, we do have $350 million of telco proceeds we are investing into new technologies. That's on top of the $400 million that or around $400 million that we would spend in any given year as well. So we've announced previously that we'll be spending around $40 to $60 million on what we call 5G standalone. Think of the 5G network, a lot of the early rollouts are at the edge, it's the 5G radio, and a lot of them remain on a 4G core. 5G standalone will effectively be making the core into 5G as well. And so the investment we're making here is accelerating that and bringing that forward, which will deliver greater speed and lower latency. In our digital identity business, Matter, we're continuing to invest in this space. Strong success with customers and new wins across the US, Canada, Switzerland, Australia, and some in New Zealand too. And most recently, we actually won a multi-year contract with the New South Wales government as their technology partner for their digital identity program. So some really exciting developments in that space. The majority of our spend, though, is from those telco proceeds, is going into the high growth data center market. And we've announced we're going to be spending around 250 to 300 million in this space and targeting returns of around about 9 to 10%. We think we're well positioned to gain a strong share in this growing market, or maintain a strong share in this growing market. We've already got the country's most extensive network of data centers. We've got 16 around the country. And we've got around $24 million worth of data center revenues today, so that will grow. And as we have previously announced, we had a new data center come online at Takanini just recently, actually in August, so that will add 10 megawatts of additional capacity to the portfolio. So last but not least, I just wanted to touch on our sustainability program. We've made real headway in this space, and I think that's been reflected by the fact we've been accepted onto the Dow Jones Sustainability Index in Australia, and that we also have now got a top quartile ranking on the Worldwide Benchmark Alliance Digital Inclusion Benchmark. It is quite a mouthful, but really important progress that we're making in this space. We've set ourselves a plan, we've outlined, I won't go through them all here individually, but we've got a bunch of KPIs that we'll be measuring ourselves against and reporting against. At a high level, the big things we've focused on for economic transformation, the biggest thing we can do here is really to support New Zealand by investing in the technologies to help drive the country forward and using technology to drive efficiency and productivity. So the work we're doing around investing in 5G in this space is really going to be important. In digital equity, we want to make sure that we increase the accessibility of our products and services And so we're going to continue to support low-income households to participate in the digital world. We're focused on using both Spark and the Spark Foundation to really continue to invest in increasing Maori and Pacifica participation in the technology sector. And lastly, from a sustainable Spark perspective, we continue to invest in our own capabilities, our well-being of our people, diversity of our people, but also on reducing the impact of the business on the natural environment, and we've set a science-based target around emission reductions. So we think it's a pretty ambitious roadmap, but it's certainly one that will make a meaningful contribution to New Zealand. So I've moved fairly quickly, but I think we've covered a bit of an overview of both the organisation, the performance of the business within the last financial year, and what's our strategy out for the next 3 years. So at that point, I'll hand back to the moderator, stop sharing, and I'm happy to take some questions.
Oh, thanks, Stefan. No, well done. I think you covered a lot of things, and we actually have no questions from the crowd, so you must have covered them all. And if any come in, we'll definitely get them out to you. And anyone in the audience, if you do have questions, send them in at any point throughout this, and we'll get them answered and back to you. So no, nice work.
Okay, all right. Well, thank you, and thank you to everyone once again for joining and taking the time to listen in and learn a little more around Spark.
Thank you.
Thank you.
So our next presenter, if we should see him pop on the screen here soon. There he is. Hello, Tony. So we mentioned we've got Just Life Group here to present, and with us is Tony Falcon-Singh. And Tony is the founder and CEO. Well, CEO since 1987, the founder of the company, and has many awards and honors around his business career. So we're very pleased that he can join us. And same thing here, Tony, I'm going to turn it over to you, and you can chat, and then I'll jump back on at the end and get you any questions that come in. So I will turn it over to you now. Thanks.
Okay, thanks, Doug. Well, it's really exciting to be here, especially in such good company as Spark. Today I'm going to give you a quick history of Just Life Group and tell you what it does now and how we see the future. I'm the founder and chief executive. We started as a fax company. Sorry. Which one?
So, Tony, if you can hear me, we're seeing your GoToWebinar screen. You're in a small screen up top, and then we can see you might have the PowerPoint somewhere else. Oop.
No, I'm not using a PowerPoint.
Ah, got it.
Right. So how do I review?
Let's see here. We might have to. Is there the slide you had up? Is that available?
No slide. As I said, no slide. It's just me. Right.
Okay. Oh, then you can just close down that screen, I believe, and hopefully we'll just get the. I mean, you could, or how did you get the? If you go back to earlier, you were on the full screen, and now we can see your screen. So however you got there, if you can reverse it, we could probably get you back on the full. There's a button that should say stop sharing screen. It should be up at the top in your control panel. It's one of those little circular buttons. If you hit stop sharing screen, you should go back on full. There you go. Got it. Sweet.
Sorry, guys. So really just going back, just giving a bit of the history of the company. We started as a fax machine rental company. Some of you wouldn't even know what a fax machine is. But we quickly moved into water coolers. And that was at a time when New Zealanders were starting to get into jogging and think more about nutrition. And so we were renting a fax machine. So I thought we'll rent a water cooler for the office. And so the company went through a fairly rapid growth and launched our IPO in 2004. My family, they still retain 70% of the company. And I think, we've shown over the years that although we own so much of the company, we do treat the minority shareholders above our interests, and often we haven't taken the dividend in favour of other shareholders. So I can just say what's good for my family is definitely good for minority shareholders. I'm not going to bet the company, and we're never going to put our interests above other shareholders. So Just Life Group, we started as Just Water International Limited. The cooler market went through a typical product life cycle, went from here slowly and then up, and now relatively mature in the B2B market. Since then, we've grown both organically and by acquisition, and now we're a company with 7 brands, each with their own website, and most of them, or virtually all of them, dealing direct with customer. So the two umbrellas are Healthy Living and Healthy Homes. Each has its own general manager. So we have 2 general managers. With a COO and myself, we make up the executive leadership team. So Healthy Living, that incorporates the water cooler business and the dietary supplement business. So as I said before, the water cooler market is fairly mature in terms of businesses, but has the advantage of strong cash flow from a fleet of over 25,000 coolers on rental. And so we don't have to invest in too much stock. So great cash flow. The average customer is there for 8.54 years. So it's a long-term customer, everyone we sign up. In terms of the home market, it's still an open market and it's all about land grab. The big financial benefits for families is that if they have a water cooler in their home, they can fill sipper bottles instead of sending their kids off to get pump or H2Go bottles. And obviously that avoids the plastic bottles. The average customer in the home is there for 6.4 years. So again, it's a really good business model. And we see growth in this part of the business, and we're putting some more effort in this summer. The other part of the Healthy Living business is the dietary supplement business, which incorporates About Health, Herbal Ignite, and Natural Solutions. So most people don't recognize the company About Health, but they do recognize the brands, being Lester's Oil, Resv, Maltiva, Element 12, and a few others. The products like Lester's Oil, have been tested by University of Auckland. It's not just a fish oil, but has complementary ingredients, 6 complementary ingredients to make it just that more effective. The results of the test by the university showed an increase in HDL cholesterol, which is the good cholesterol for the participants in the study. So About Health and Herbal Ignite have been sold for many years exclusively online. I just love the online business. We get the full margin, the money is all up front, and we don't need a lot of room to warehouse. However, we've recently tested selling these brands at retail, and based on years of advertising, the initial results have been excellent. So we continue to expand into the retail market over the next 12 months. We've taken a stand at the biggest natural products expo in the world, which is next March. We're selling the Herbal Ignite product and the Prostate Power Flow. We've gone for just that small niche, which we think is a niche that is good for the US. It's estimated that 18 million men suffer from erectile dysfunction in the USA. So we'll be after capturing that market, people who want a natural product. We'll also sell the product on Amazon in the USA from about January 2024. Also looking at new products such as Libido chocolates, Libido shots, to expand the Herbal Ignite range. The second segment is the Healthy Homes, which incorporates 3 brands, so Solitude, Home Tech, and the Cylinder Guy. Solitude is a unique tubular skylight, just favoured over conventional skylights because it stops ultraviolet and heat coming into into the home, so you don't get fading of furniture and carpets. This product has been installed. We've got 17 licensees, and Home Tech has had this agency for about 25 years. So with all those customers who've taken it on, there are a lot of referrals. People ever look at our website, people just love this product. Home Tech is a ventilation specialist, operates directly with customers as well as building companies and Clunga Aura. It's really encouraging that both political parties are supporting warm, ventilated, healthy homes in the future. Cylinder Guy is a well-known brand through its just consistent advertising on TV over many years, and it tends to be the first company people think when their hot water cylinder leaks or stops heating. We have a KPI that will answer not only just answer any lead, but have a written quotation to the customer within 60 minutes. There are almost 2 million homes in New Zealand, and every 15 to 20 years, your hot water cylinder goes. And we have Pete the Cylinder Guy fix it promptly. So that's the 8 brands that we have. I'll now go back I'll go to the composition of the company. Our board's made up of Phil Norman, who's the chair. Phil was the original chair of Xero, now holds directorships of 3 other public companies and several private companies. He's got an amazing experience, and it's great to have him on in our company. In addition, we've got Richard Carver, CEO of Jenny and Homes, a director of several private companies. Again, for our healthy homes segment, he adds enormous experience. Steve Bayliss, director of one other public company, several private companies. He's our marketing guy on the board and a big contributor. Lynn Jacobs, who is our former group general manager. She knows the company well, knows the products well, knows all the people. So it's a really excellent high caliber board that we have. We've also subscribed to the Institute of Directors Future Directors program for some years, and Jacinta Taliali has held that role for the last 2 years. So with that experience, that provides support to the management of the company. We are an entrepreneurial company, and we'll continue to try things, but we'll never bet the company. We don't get them all right, but we're ready to try. Our values are inscribed in the acronym FIRST: fun, integrity, respect, service, and trust. Over 36 years, we've built the culture where people like to work in this environment. We have a chief executive's guarantee on our websites, which says we treat every one of our staff, our customers, and our shareholders as if they were part of my family. And I offer this personal guarantee that if you think you have not been treated fairly, you're welcome to contact me. On the website, I have my email address and my mobile number. But I guess I'm the only CEO of any public company that has that. So how do you assess the company? We don't get many brokers following us, so I'll tell you the inside oil. Over the last 7 years, we've always paid a dividend. Right today, we'll be sending out our final dividend for the year. Total dividend is covered 1.8 times by earnings. I've often said that profit is a matter of opinion and cash is a matter of fact. It used to be that accounts showed a true and fair view, but today no reasonable person could work out what the true and fair view of a company is. It's now a true and fair view as decided by the International Accounting Board, not by investors who are looking to understand the company. I mean, we have a 100-page report, which I don't think many people can understand. It never gets smaller. Few people read it, few people understand it. I think for companies with a market cap of less than 100 million, it would be good to have the NZX could come up with a lesser requirement, and that would certainly keep down the costs. Probably the most ridiculous recent imposition is ESG. As a company, we've always had an environmental policy, and the board is quite targeted on reducing our carbon footprint. But to add social and governance to this policy is just accountants making business decisions on what a profit consists of. It's up to a company how they handle their social policy, and governance has always been the domain of the board. Accountants do not know how to run companies, and for them to dictate accounting policies on these issues adds complexity and additional accounting and audit costs to companies. The only way a normal person can assess the profitability of a company is looking at the cash at the beginning, how much we get in, what you spent it on. So in my opinion, a true and fair view, as per these accounts, is now just an academic exercise. I don't think I'm alone in these comments, just larger companies find it easier to go with the flow, not worth the fight. So how do we see the future? There's a reason we don't offer forecasts. It means too much soul searching after each month's results. We prefer to sit on the most recent performance as a measure for investors. However, we've got some exciting things happening. We have a current base of over 25,000 water coolers, bringing in a recurring income with the average cooler in the business for over 8 years. Our new initiative to expand the local water delivery market, which has proven to be an excellent business model, with the average cooler in the home for over 6 years. We'll have continued growth in the About Health range of products in what is a growth market for supplements. Got our launch of the Herbal Ignite in the USA market and on Amazon USA in the next March. We also have our exclusive solar tube agency with 17 dedicated installers. The cylinder guy being a household necessity. It's going to happen to your hot water cylinder sometime. Home Tech provides a ventilation system to Kangaora, and hopefully we have a friendly government coming in. It's also a great time to be looking for acquisitions, and we have funding facility to do so. So we'll always have our eyes open. So although we, as we look forward, it'll continue to be a tough environment, but I think we sit in a sweet spot with our portfolio of excellent brands. It does give security in tough times. We have a strong balance sheet, great management team and staff, and the ability and desire to grow. Thank you.
Awesome. Thanks, Tony. Appreciate it. Great presentation. Thanks for going over the business. Just one question, a couple of questions, but kind of on the same topic around the filtered water market and competition. And there's some other players out there, I think EcoBud and is it Dopper? Very competitive. How do you guys go about, competing there and maintaining a leadership position and I guess differentiating yourselves from those guys?
I think, right now in our prospectus in 2004, it was all about land grab. If you can be in there first, you can see the times that customers keep their water coolers. We grabbed them first before anyone else did. And so they are pretty, very faithful to us.
Yep, fair enough. Awesome. Well, there'll probably be some more questions coming in. Really appreciate you putting that together and joining us today. And yeah, great job. And we'll get back to you with more questions as they come in. So thanks, Tony.
Okay, thank you.
So that brings us to our last company and last presenter on today's webinar. We have, hopefully we've got this all rigged up. There he is. Hey, Richard, how you doing?
Good, thank you. How are you?
Good. So our last presenter or last company here is New Zealand Rural Land Company. And joining us is Richard Milsom, who's the co-founder and director of NZ Rural Land. And I'm going to turn it over to you, Richard. Same thing. We'll do 15 minutes or so, and then get back to you with questions at the end. So I'll jump off now and then let you get started.
Thank you very much. So let me pull up a presentation.
And we can see that.
Great. I'll just move it to full screen, and I will. What I'll do is I'll talk to a few slides in this presentation. I won't labour every single slide. I'll also release it on the NZX after this webinar, and so anyone that's interested can see it online. I'll put it up on our website as well. So, New Zealand Rural Land Company at its core owns and leases some of the best farmland in the world, being New Zealand rural land, and leases to some of the highest quality operators in New Zealand, offering an unparalleled investment opportunity. The reason that New Zealand Rural Land Company is without parallel is because of a combination of advantages. We've got a big macro tailwind in a rapidly growing global population where food demand is increasing, and we're also seeing a decrease in available productive land. That means that investing in the scarce and critical food producing infrastructure has demonstrated a consistent and positive return over time, and we think that'll continue. Now, where does New Zealand fit into that? New Zealand's got some of the most productive agricultural land in the world. We've got a Goldilocks type scenario where our water, soil, space and climate all come together to deliver not only the lowest cost production of a variety of food, protein and fibre, but also the most carbon efficient producer of a lot of that on a global basis as well. So then where does New Zealand Rural Land Company fit into that macro theme and New Zealand's advantage? Well, we want to own the land, being the scarce infrastructure like asset, and not be invested in the farm operation. So we don't have any direct exposure to any operational environment or commodity risks. We own the land, we lease it out long term to our tenant partners, high quality tenant partners. So currently we own just under 15,000 hectares of high quality and productive rural land in New Zealand, and we lease it out long term. NZL, or New Zealand Rural Land Company, is the only pure play NZX listed exposure to agricultural land in New Zealand. And as such, it provides investors with not only a liquid way to access a reasonably illiquid asset class, but also hopefully offer an inflation hedge type investment. And for overseas investors, NZL is one of the only ways that they can gain exposure to New Zealand agricultural land with the prohibitions that come with the Overseas Investment Office. And since listing, New Zealand Rural Land Company's established a track record of outperforming the broader rural land market. So if we look at why New Zealand's a leading producer of primary products, it's 4 core reasons. New Zealand's the most efficient from a cost and productivity point of view and lowest cost producer in the world, and that's, as I mentioned, because of its Goldilocks-like combination of high quality soils, rainfall, temperature, climate, and we've got the infrastructure. New Zealand's got a distinct sustainability advantage, so it's got a lower carbon footprint for its primary products than most, if not all, alternative producers. New Zealand's also a world-class risk mitigator, and so the importance of agriculture to the economy mitigates political risks by and large, and social risks are mitigated by the industry's active management of its social perception and social license, and we've seen that recently with improving water quality and engagement with the public and a decrease of this rural-urban divide. You've then got New Zealand as a very advantaged exporter and who's very well positioned for free trade, because we produce a lot more food and fibre than we need to consume domestically. We produce it at a low cost, at a low carbon footprint, and so our ability to trade freely with other people around the world that would like our produce is really important. And so 95% of our products are exported to over 130 countries. 90 million people can source all of their dairy needs from New Zealand, and just under $13 billion is the value of New Zealand's just dairy exports each year. That's not talking about red meat, beef, lamb, timber, other fibres like wool. If we then have a look at a snapshot of New Zealand Rural Land Company today, we own just under 15,000 hectares of rural land. The average weighted lease term is 11.5 years, so there's a lot of predictability around income. We've got land holdings in the North Island and over the South Island. They're 100% occupied, and currently there's 8 large quality tenants. If we then look at our Rural Land Company year-to-date highlights, so net asset value per share has grown from $1.25 at listing to approximate just over $1.50 per share. Share price is currently trading at over a 40% discount to the net asset value per share, making it very compelling buying. And in fact, we're buying back shares from market at Rural Land Company at the moment. We've further diversified the portfolio via a forestry acquisition this year, and that now makes up a large portion of our total hectares and also 30% of our lease income. The share buyback continues. The board considers Rural Land Company to be materially undervalued by the market, and so while the market provides the opportunity, we'll continue to buy back shares. And the accretive forestry acquisition boosts our AFO per share. If we then turn to this section, delves a little bit deeper into NZL's advantages around its sectorial advantages, its sustainability advantages, its structural advantages, its risk management advantages, and its return advantage. I won't labour each of these slides, but I'll put them out publicly so that if anyone would like to read them, they can go through them. If we look at our portfolio at the moment, I've mentioned just under 15,000 hectares of rural land, a variety of land classes, 8 high quality tenants and 100% occupied. There's a summary of our operational outlook, which is the acquisitions we've made to date, which is a forestry portfolio. We've established a green loan. We've announced an increase in our earnings guidance, and we've announced a share buyback because we think they're materially undervalued by the market. And in terms of longer term outlook, all of the leases incorporate regular and uncapped inflation reviews. And so high inflation results in high rental growth. The first lot of rental increases that our tenants will see will be next year. 55% of the portfolio by leasing comes due for a CPI rental review next year. Our debt is over 50% hedged, providing some certainty around our lending costs, and properties are valued annually. The year-to-date farm price index has seen a movement of a relatively immaterial value, and so we think prices might be close to flat this year, or values, should say. We provide a little bit of an update on the timber and carbon and dairy markets to offer some insight into what our tenants might be seeing. And just a reminder about over time, there is a plan to create a diversified rural land portfolio, and gives everyone a little bit of an insight into what we're looking at any given time and where we see different sectors on a quality and also pricing point of view. And just a reminder of what New Zealand Rural Land Company provides investors with exposure to, which is a very favourable industry dynamic in terms of more people want more food globally. New Zealand's a really advantaged supplier of food to the world. We've got a sustainable and structural advantage in the type of land that we own, and that provides a very scarce infrastructure type resource. Rural Land Company is a proven value add acquirer of land. So the track record's good for acquiring land well and attractive total returns. And then the partnership with our high quality tenants with a long-term weighted average lease term and a significant growth opportunity over a long period of time. And so that's largely where I'll end the presentation and open up to questions.
Cool. Thanks, Richard. Appreciate that. So keeping true to form, we have no questions from the group, like with the prior two presenters. So what I would suggest, if everyone does get a chance to go and download the presentation from the NZX website, we'll find out where that is and also get it out in the email. If anyone does have questions for any of the presenters, please fire them in afterwards. Richard, thanks a lot for putting that together and for spending some time with us and speaking with the audience today. So thanks again, and we will be back in touch.
It was a pleasure. Thanks for joining us, everyone, and thanks, Doug, for hosting. Appreciate it.
Cool. All right. Well, thanks, everyone, and appreciate it. We'll see you on the next one.